Hello, this is Mike Swanson of WallStreetWindow.com. It's been quite some time since I've done a live video like this. I'm not sure actually.
Hello, this is Mike Swanson of WallStreetWindow.com. It's been quite some time since I've done.
I think I may not have even done one all year long. I'm rusty at doing them, as you can see from what just happened there. But there's been some tremendous moves in the stock market this month. And sometimes there's things that it's easier for me to show you than to write about in a blog post. And that's why I decided, just on the spur of the moment, to make this video for you. In this market, we've had some sharp declines really in 2 days all month that have driven the market lower. When it happened the other week, the Dow fell over 800 points. And then the next week, it was up over 500 points in a day, and then really didn't do much until just recently, when we have seen another plunge. Now, I was watching CNBC very closely yesterday, and Jim Cramer was on in the morning and was saying the market would bottom if the VIX went up to 25. Well, we're above 25 right now, and I don't think that means it's going to bottom, because important critical bottoms have come when the VIX has gone above 30. And last February, it went over 40, even briefly touching 50. And there's, it's easy to think and assume, and I was doing this myself, frankly, that we could see a very sharp drop in the market that would be very quick. And that would cause the VIX to jump up and bring in the type of low we saw in February, this past February. But not only did that type of action happen in February, but it happened in August 2016. Within a matter of days, the stock market had a sharp drop that caused a panic bottom. And really, in 2016, there was another bottom that played out over, let's say, 3 or 4 weeks. So these were very quick drops. And the same thing also happened in 2014, 2012, 2011. Essentially, for the past 10 years, every drop in the market that has brought panic has played out very quickly. Now, what I want to show you, though, is inside the stock market, and not just one chart or one indicator, but we're going to look at a lot of stocks. And this is something I can only really do quickly in a video like this with you, to see what is really happening inside the stock market. It's not enough to just look at the Dow symbol or the S&P symbol or one or two indicators. And I got favorite indicators to look at all the time, like the internal indicators, the percentage of stocks above or below the 200-day moving average. That indicator is, of course, disintegrating, and it kind of foretold what was going to happen because it broke before the stock market broke. And as far as the averages go, the New York Stock Exchange Composite, which is all the stocks in the United States, not just 30 that make up the Dow, it closed at a new low, below, in fact, the lows of this February today. But when you see sharp declines in the market, it forces you, it makes you, everyone watching it, to wonder, is it going to bottom tomorrow? So that's what we're all going, that's probably what you're thinking about. And when the market moves, people are out there trying to call the bottom. As I said, I saw not just Cramer, but yesterday afternoon, 3 or 4 guests in a row calling a bottom. And now today, similar. And if they weren't calling a bottom, they're saying this is a good buy anyway. But I want to show you something, and that is what is really happening with individual stocks, because I believe there's something happening that I have not seen myself in 18 years. That's a long time. and I want to show you what I'm talking about. So I'm going to share my screen, and this is the S&P 500, SPY, the ETF for the S&P 500. But let's look at the stocks inside of it today. And you can see, yeah, it fell 3%. But when you look at this, it's easy to think, well, we got support here, which is around 2,600. And this indicator is the lower 200-day Bollinger Band. So it's easy to imagine, well, we can bounce. Maybe we can go lower a little bit and bounce. And we can do all those things. But that's kind of trying to predict this. And it doesn't mean if it bounces, is that the bottom. The only way we'll know is if there's real panic. Otherwise, we're just going to have a bounce like we saw 2 weeks ago. As long as we don't see real panic like we saw in February, any bounce should only be treated as a temporary bounce until we see panic. And I'm not trying to predict when that moment's going to come. This is just a warning, though, that there is no evidence that I can point to right now, 8 o'clock, October the 24th, that we're near a bottom or we've made a bottom. None, except I hope it holds up, which is no evidence. And what I really want to show you is what's happening that I've not seen in 18 years. And that is what individual stocks are doing. Now, this stock is in the S&P 500. It may not necessarily be that important, but it's down significantly today. This stock is down 10% today. And again, I'm not going to say this is an important one, but this is an important stock. Nvidia was it was the top gaining stock in 2017, in 2016, and one of the most widely owned and widely traded stocks. It just made a new high, in fact, not even a month ago, and it was a fake breakout, and now it's leading the way down, and it was down almost 10% today. But what's important about Nvidia is while with the S&P we can say, well, maybe it can bounce on the February low, and Nvidia, all supports have been taken out. And this is a stock that is broken and looks like it can go to 150. Really, it can go to 110. We don't know where the bottom is because the supports of any meaningful way have been taken out. And this is the type of danger situation that anything gets into when it's trading below the 200 and 150-day moving averages, and starts to get away from it, which is what's going on in Nvidia. It's what's going on with Alexion Pharmaceuticals, down 9% today, smashed. It's what's starting to happen with Netflix. And for disclosure purposes, you need to know, because whenever I mention a stock I got a position in, I'm legally supposed to tell you that I have a short position in Nvidia from last week. So I'm just going to tell you that. And that doesn't, I could get out of it tomorrow or whatever. It doesn't matter. It's not a big position. It's not an important position to me, but I just tell you because I'm obligated to tell you. But what's more important is Netflix is one of the most popular stocks. People trade in the stock market, and it is already sitting on the April low, and it's falling on high volume. And I think this stock is broken. And stocks like this, and here's Advanced Micro, which is a strange chart. Discovery was down 9%. Look at this stock, is down 8%. It's already collapsing. This stock is down almost 50% already. Viacom just got a hit. It's already above support. Micron is in a free fall. For disclosure purposes, you need to know I shorted Micron last week. But anyway, it doesn't matter. It's in a free fall. It's broken all supports, already below the February and January lows. This is a stock that easily looks like it can go to $30. Texas Instruments is broken all supports. It's down. So when we can imagine, can the S&P hold the low or the Dow or whatever of February, there's so many leading stocks, important stocks that are broken already and are in a free fall. Texas Instruments, one of them. AT&T smashed, already near the July lows. Newfield Exploration, total collapse, already making new 52-week lows, already down 30% in not even a month. Laboratory Corporation of America in a free fall. Freeport McNamara down 8% today, even below the lows of over 12 months. This is a stock falling hard. General Dynamics in a collapse today, even though Boeing reported earnings and gapped up on the news. General Dynamics has made a new low for the year, even though it has juicy government contracts that any normal business can only dream of. Guaranteed profits, it's down. Xilinx, another semiconductor stock, smashed. This is another one stock. AMP, Hilton Worldwide, no support on Hilton Worldwide. We had a support of 75 all summer. Now it's broken through it. It's a disaster. This is another one, a disaster. And I mean, Royal Caribbean Cruises is collapsing. Cabot Oil making a new 52-week low. Autodesk, falling hard, but it went up so much in August that it's okay compared to what we've seen. Noble Energy, Take-Two Software, United Rentals look at what this stock has done in just the past couple of days. So I mean, I can just go on. American Airlines, another cruise line, Mosaic down, Northrop Grumman down, another defense contractor smashed. Western Digital, new 52-week low today. Amazon is even getting hit hard, and it's one of the most important stocks for people. Skyworks, total collapse. You look what this stock has done. New 52-week low. And these are stocks in the S&P that are popular to trade. Pioneer. Caterpillar. Look at that. And look at what I just passed by Facebook. Below a new 52-week low, or new low for the year today. New 52-week low. MetLife. Raymond James. So, and here's Microsoft, even, which may go up tomorrow because it's reported earnings on the close that are good, but look at the position it's in. Now, of course, let's look at the stocks that went up the most today. And here's one that gapped up probably on news, but it's not a new 52-week high. It just gapped up and into the 200-day moving average and faded. Here's one that did make a new 52-week high, but it's a defensive stock, utilities. And utility stocks, people buy them, as a safe haven when they think interest rates are near an end of going up and they're going to go down, so they want to get the dividend. It's a defensive play. Juniper was up. Another utility stock, a REIT, also defensive. Duke Energy, another utility up, another utility up, another utility up, another utility up. These are the top gainers for today. Another utility stock, another utility stock. So the last time I saw utility stocks, really do great, is in the first quarter of 2000. Another REIT. Procter Gamble, another defensive stock. Pepsi is a defensive stock. Another REIT, another utility, so you get the idea of what's going on. And today is an example of what's been going on for the past 2 weeks. Defensive stocks are now the leaders, utility stocks, REITs, stocks like Procter & Gamble, whereas technology stocks that were once so popular, once said to be momentum plays, once said to be ones you must own, are getting crushed. Not only are they getting crushed, they're in positions like Nvidia where they look like they are in some sort of waterfall decline, and there's no sign of a bottom yet in the stock market. Nobody can point to any sign of panic selling. The VIX is not even gotten to 30 yet. Maybe it'll get there in a couple days. But what if it doesn't? What if the market just goes up tomorrow and we go sideways for another week and the same thing that happened last week happens again? Then we're set up for even more declines. We're set up for a process that is not like February of this year, not like August of 2016 or any of the other declines we've seen since 2009. In the sense that they just happen fast over 1 or 2 weeks, but something that could go on for months. And that's why so far this correction and drop is playing out differently than anything that's happened in the market really since 10 years. But what's different from what's happened since 18 years is these stocks being in a position for waterfall declines after having just made a new 52-week high, not even a month ago. And the last time I saw that happen in the financial markets, in the U.S. stock market, was in March, April of 2000. There were internet stocks that were doing this, that were breaking down and falling 50%, 30%, and so forth in March, April 2000. That's what I'm seeing inside the stock market. Stocks, I'm not saying Nvidia is going to zero or it's a crappy internet stock like pets.com or eToys or something like that. I'm saying Nvidia is trading like those stocks did in March and April, having a very violent decline off of a 52-week high. And that drop in March, April 2000 was the start of that bear market cycle. Now, when that drop ended, things did come back up. The Dow and the S&P were able to make new highs by September, but it was a crushing and brutal decline, much bigger than anything we've seen in the stock market since 2009, even bigger than the 20% decline that last happened with the NASDAQ. If you take the high of July 2015 to the low of the first quarter of 2016, that was a 20% decline. We appear to be on track for not just a simple 10% correction in the U.S. stock market averages, but something that's going to be bigger than that, maybe 20%, maybe 15%. I can't predict that. All I can tell you is that we're seeing waterfall declines in key stocks, something not seen in 18 years, and we've seen no sign at all that this drop has come to an end. And until I see a sign that the drop has come to an end, I have to do one thing as someone participating in the financial markets, and that is make the assumption that it's going to continue. And that means this is a very risky stock market until we see it end as far as buying stocks. And it's going to be a very volatile market also. So, I'm not just trying to suggest that you should just go short stocks or bet against the stock market if it's something you don't have experience doing, because it's harder than it is to go long. However, going long during big stock market declines or in the middle of a correction is not an easy way to lose money, especially if you're adding on to positions you already bought before, or you're already 100% invested and you're trying to take on more risk to make up for some losses that have happened. You shouldn't do that. Don't do that. Every correction destroys a group of people that are taking too much risk in the markets, and it cleanses them out. And that's something that's going to happen as this process plays out. But there's no reason to be scared during times like this if you just accept what's going on, and just, if watching the market or watching CNBC or the news throughout the day, is causing stress or any sort of anxiety for you, then just don't do it. Just look at things after the close and then make up your mind. You don't have to be a hero. You don't have to try to buy the bottom. You can wait till we see the evidence that this process is finished. But with these key stocks, I mean, this Nvidia and the chip sector in particular, these are waterfall declines. This is stuff, they're trading like internet stocks, and it's just very brutal, very brutal. So, I mean, I wanted to show you, I've got 7 minutes because I got to take off to talk with someone. So I'm just going to go through some more, I guess. just at random. We're going to, I mean, just go through this random. Now, this is important to point out too. It's not just semiconductor stocks. It's bank stocks that are doing this. Look at this bank stock. And the XLF ETF has that chart too. XLF, new 52-week low. It's a total disaster. All right. Higher interest rates are supposed to help banks. They're killing them. They're killing bank stocks. And when bank stocks and chips are trading like this, and home builders are the worst, this is telling us something. You know, this is not, you know, hey, let's just throw some money at this and it's just going to go straight up for us. This is telling us that this market is much more treacherous than it was a few weeks ago or a few months ago, and we have to respect the trend. Things are trading below the 200 and 150-day moving averages. We're below those levels. We've been below them now for the S&P 500 for almost a week. But even worse, the Russell 2000, we're now, you know, trading on the low February and extended the decline away from those moving averages. And the New York Stock Exchange composite of all stocks in the market is completely broken down. It's just, I'm saying this and showing this to you. Hopefully someone's going to watch this who is tempted to just run out and buy stocks tomorrow and say, whoa, okay, let's just calm down, and I don't have to be a hero. If I want to gamble, I don't need to gamble thousands and thousands of dollars. If I'm an addicted gambler like that, I can just buy a lottery ticket. I go to a casino for $100 and stick it in a slot machine. I don't need to do that with, you know, a brokerage account and lose lots and lots of money. I don't care what they are yelling picks on the television set about. This is not time to just make wild gambles. Look, in the 7-position portfolio, 2 of the positions are in cash right now. Almost 30% of that portfolio is in cash. And the portfolio is actually up a little bit this month, and up since I started it right around Labor Day, because I'm not trying to make giant risks. And I got 2 long positions balanced by 3 short positions. But I'm doing good in making some money. I made money today, even though that portfolio is 30% in cash. It's time to reduce risks. It's time to be cautious when the market trades like this. Now, I also got a big account with tons of money in it, and even that account has over 50% cash in it. That's not because I want to stay in these cash positions forever. It's because this market reached a massive valuation in this cycle, and now look what's happening. And you know, stocks like Nvidia, they got wild PEs and price to sales ratios. You know, so that's why they're dropping so much. They're not dropping because they're going to go bankrupt like Pets.com and these phony internet companies did in 2000. They're dropping because the valuations are so friggin' crazy, because stock buybacks and low interest rates and a bull market that's been going on since for almost 9 full years now, is, you know, without a real drop of more than 20%, you've got everyone invested and really kind of not believing anything that happened. The thing that happened in February, I think that drop, it happened with the Dow falling 1,000 points and 10%. You know, it was scary for a few days, but things came back, and then we made a new high the other week. And I think that drop actually has made people think, well, we saw a drop before, so I don't have nothing to worry about. And so these drops happen now, and I don't need to pay attention until people wake up and they see, oh, I got these losses. What happened? Well, you're paying attention. Most people aren't paying attention. We're paying attention together, and we're going to keep on doing that. And if you're not in the Power Investor Group, go and get in it. Click below this video if you're watching on my website, and there's a link below it, and just get in the total trading program. You'll have access to my portfolio and my alerts, the real information, the real good stuff, so to speak. Because one thing about these moves, they do create opportunities, and that's why instead of being scared, really this is an exciting time to be involved in the markets because really not much was happening this summer, and when things move, when you're positioned correctly, that creates gains, and when you wait for opportunities to line up, it creates opportunities. The opportunity is not right now, but it's coming, and it takes keeping your eyes on things, being prepared to take advantage of things. So, be talking with you later. Good night.